another beautiful day. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations. That's what we always do on Business Morning, and that's what we do again today. We start from the global space where oil prices rose on Thursday, buoyed by optimism over U.S. trade negotiations that would ease pressure on the global economy and a sharper than expected decline in U.S. crude inventories. And Brent crude futures gained 24 cents, that's about 0.4%, to $68.75 a barrel. U.S. West Texas Intermediate crude futures also added 25 cents, also 0.4%, to $65.50 a barrel. Both benchmarks were just a little change on Wednesday as markets are monitoring developments in the U.S.-European trade talks following President Donald Trump's tariff deal with Japan. The agreement lowers duties on auto imports and spares Tokyo from new levies in exchange for $550 billion package of U.S.-bound investment and loans. Two European diplomats are saying that the EU and the U.S. are moving toward a trade deal that could include a 15% U.S. baseline tariff on EU goods and possible exemptions. Well, still talking around oil and gas, but back here in Nigeria, Nigeria and West Africa is set to improve in oil and gas sector as plans are underway to stop depending on Europe and Asia to set field prices and build a benchmark that reflects regional realities. The Chief Operating Officer of the Nigerian Midstream Downstream Petroleum Regulatory Authority, Mr. Farouk Ahmed, disclosed this on the sidelines of the Global Commodity Insight Conference, which was in Abuja in Nigeria.
So the idea is we have been, as a country, major consumer of petroleum products, and then also currently the way as Dangote refinery comes on stream and improving in terms of production capacity, and other refineries around the West African coast like Senegal, Ghana, Niger, Cote d'Ivoire, that we see the need for price and benchmarking for West Africa. Because as we import products into West African region, the bulk of the assessment is based on Northwest Europe, Mediterranean Sea, Mediterranean, Arab Gulf, and other like Singapore.
So we're at the cusp of the regional market developing. Nigeria is a great growth story. West Africa is a great growth story. And so this market now has the potential to really come into its own. At S&P Global Commodity Insights, we have 100+ years experience of developing commodity benchmarks. And that's why we want to be early in the dialogue, partner with the NMDPRA to facilitate the discussion and to see how over the coming years regional price benchmarks can develop.
President Bola Tinubu has restated his commitment to build a future-facing infrastructure that would spur economic growth in the country. The Minister of Communications and Digital Economy, Bosun Tijani, stated this following a meeting between the President and a delegation of the World Bank, led by the Managing Director and Chief Financial Officer, World Bank Group, Ansula Kant. The meeting focused on 90,000-kilometer fiber cable project that's meant to improve the quality of connectivity in the country. The World Bank executive also commends the President on the ongoing reforms embarked upon by his administration.
The World Bank is helping us to structure the round where government is putting money into this special purpose vehicle that is going to build and operate the fiber network, but we're also then getting 51% of the total funding from the private sector as well. And the entity is then going to be managed as an independent entity, not a government-led entity. The private sector will help us ensure that it is managed in a sustainable manner and that we can recoup our money back because people will pay for these services.
I must say that I shared with the President that congratulated the country and the President for embarking on such ambitious reforms, macroeconomic reforms, and staying the course. They are not easy to do, but already you can see the big improvements and, forward growth and momentum that is taking place in Nigeria.
Let's head to the commodity space now with the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani. Mr. Rwani, good morning and welcome to the program. Days after the rebase and a hold position from by the MPC, I wonder how the markets and reactions following those from what you have found out. I think you should unmute, Mr. Rwani. I cannot hear you.
Sorry, the market, there are two developments in the MPC meeting. One is that the market is happy that the Naira is appreciating. And two, the stock market was a bit disappointed that the interest rate was not brought down. So what we are seeing is that people rotating from selling, some of them are selling their stocks, profit taking on one hand, and using that to buy Forex on the other. So we are in the next 2 days, we're going to see some kind of stability. In other words, the Naira would depreciate marginally towards where the official rate is. And then as earnings begin to come out, the Q2 earnings begin to come out, we are going to be seeing some stocks actually appreciate. Some stocks have been oversold already. So we think that there's some asset bubble being created. But generally speaking, the market is quite delighted that nothing unexpected happened at the MPC. As a matter of fact, are quite excited about what has happened.
Is the fixed income market also happy?
No, the fixed income market expected when rates go down, then fixed income security prices go up. So those who were trying to who bought bonds at that time, hoping to sell when the interest rates come down, will have to wait until September 22nd. Nothing else is going to happen to change that.
And the Naira, even though the CBN governor had expressed fear, the impact of FARC, especially as FARC is going up, what it does, you know, as you have said, the demand on the dollar and all of that. Can we expect the Naira also to stay in this level of about 1,005, less than 1,006 until September?
I think that what the central bank governor was saying prior to that meeting was sending a very tacit signal to the fiscal authorities that, please, can you actually slow down the amount of cash injection into the system by way of FARC? And even if you're going to inject it in phases so that the economy doesn't get into a realm of overheating. I think that signal was there. And actually, since that time, we've seen the amount of tightening, the amount of securities being sold into the market higher, so that it's withdrawing liquidity from the system. So generally speaking, there's nothing to worry about. And FARC has only gone to 1.8 trillion naira from 1.6, and that can easily be absorbed by the system.
And we see on your slide, LNG plunged by 5.2%, driven by cooler temperature. How does this fit into the Nigerian economy and domestic markets?
Well, Brent futures rose to 60. Every time, like I said on the program on 10 o'clock news, it's only when the price of oil falls below $65 a barrel that we have so much to be worried about. What has happened is that our production has gone up from 1.3 to 1.5. So what we lose in terms of price, if there's a price decline, is made up by production. And production from the more lucrative land and swamp assets, where Nigeria as a JV partner actually gets more revenue for itself. So, and it's a paradox of oil price. The higher the oil price, the higher our revenue. The lower the oil price, the lower the petrol price, and lower inflation for the Dangote refinery that is selling and bringing down the price so that Nigeria begins to benefit from the lower oil price. So whichever way we look at it, Nigeria benefits both on the upside and the downside.
Talking about the oil and what Mr. Dangote said about how much Africa is spending importing refined petroleum products, I think about 90 billion is what it says annually. And then also the fact that Nigeria is now a net importer of U.S. crude. He had said at the event that just concluded in Abuja that he never thought that we would have to be importing crude into the country. Do you see a situation where perhaps Nigeria could fulfill all its obligation or major parts of its obligation, and then we stop this business of importing crude. Do you see it happening anytime soon?
I think it's going to happen, but don't forget that Nigeria, Lagos is just becoming a hub for refining. The other hubs, Singapore, Houston, and to a large extent Rotterdam, and sometimes in India. What we are seeing is that the infrastructure and what I call the institutional infrastructure for setting up a price system, pricing index for West African produced crude is coming up. That was the purpose of that seminar, where we had S&P and Platts coming together with the Dangote Group, and it was very clearly defined that once the production is guaranteed, once its supply is guaranteed, then the price mechanism to actually determine that there's an efficient pricing system will emerge, and that is what is happening. So it's just a temporary evolution of a pricing and efficient pricing system for Nigeria.
So what happens to OPEC? I thought OPEC was there for the pricing of crude.
No, OPEC is a cartel, an oligopoly of oil producing countries, which determines one, price, two, output, and they have what they call the swing producers, mainly Saudi Arabia, now joined with what they call OPEC Plus with Russia. So that determines the benchmark price, or whatever you call it. But the index, the pricing mechanism, which has, you have different types, WTI, Brent, and Quarable. Now they're trying to determine, trying to develop an index which will give you an efficient price, so that when you say West African crude, this is the price of West African crude traded in the futures market for the next 60, 90 days, it is $70. The WTI, which is West Texas Intermediate is so low. Brent is so low. Bonnie Light so. So that's what they're trying to do.
All right, and Sarwani, what's going on with domestic commodities now? Any changes since the last time we spoke about it?
Yes, domestic commodity prices actually are now beginning to fall because people are anticipating the harvest season. For some strange reason, the August break came earlier than expected. So we are now beginning to see the harvest mechanism. And so people are saying, all right, fine. The naira is appreciating. The import substitutes are going to be cheaper. So now let me now begin to sell, or begin to put my commodities into the market. So we've seen the price of flour come down to 87,000. We've seen Gari down to 33,000. Price of rice actually is down to 87,000. And price of Gari is down to 33,000. That was the sharpest drop we saw. Pepper has dropped 11% to 80,000, and tomatoes is down now flat at 110,000. Onions is down. So basically, those seasonally, those commodities that are seasonally sensitive, which respond to the harvest season, as well as the logistics costs, we are beginning to see those prices begin to fall. One, the price of petrol is down. Two, there's a massive increase in the quantity coming into the market because of harvest and anticipation of a bumper harvest for that matter. Because the use of fertilizer this year was much more than we had last year. So generally speaking, we think that this will drive the July inflation data down marginally, and that will be food for thought, or be a catalyst to enable the central bank MPC, when they meet in September, to take a more positive position in terms of bringing down interest rates, all things being equal.
Yeah, they say all other things being equal. But Mr. Arwani, this also brings to the fore another unfortunate reality, which is that because it's going to be harvest season, then we see the prices fall, and right after that we are back to an increase in price because of the lack of storage facilities, preservation, and the development of the value chain of these crops.
Yes, it is true that we need to ensure that we have storage, we have to have efficient transportation, and post-harvest losses are actually very high in Nigeria. But what is happening is that there's a diversification of the demand structure. You have industrial demand for, say, like maize and sorghum by the breweries by the Nestle's of the world who are using it for golden morn. You also have those who are using it to make ethanol as a substitute for alcohol. And we also have that for direct consumption. And we also have the people buying it for animal feed. So when you put all of these things together, you see that there is that possibility that the demand is increasing, but it's diversified. Well, one thing I must let you know is that there was another element in the commodity value chain in Nigeria. People were growing commodities and exporting them to the neighboring countries to earn foreign exchange. But since the exchange rate started stabilizing, you've seen a reduction in the export smuggling, and therefore it has increased supply in the domestic market. And that is one of the reasons you're seeing the price of these commodities come down. Because the exchange rate has stabilized, the incentive to carry things across to Cameroon and Benin to sell, which reduces the amount the commodity supply in Nigeria, and therefore increased prices, has dropped. Therefore, because export smuggling has reduced, we are going to be seeing some commodity prices begin to fall, and that is good for the Nigerian market.
All right, Mr. Irani, thank you so much for that and your views this morning. Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Irani.
Thank you for having me.
Now let's talk about debts and borrowing. The House of Representatives, they've approved President Bola Tinubu's 2025-2026 external borrowing plan. The borrowing package includes $21.89 billion euro and 2.19 billion euros, as well as 15 billion Japanese yen. You remember this was passed by the Senate 2 days ago. Now, according to the documents passed by the House, the borrowing plan does not equate to actual new borrowing for the 2025 fiscal year, as it has already been captured in the midterm expenditure framework covering both the federal and the subnational governments. Meanwhile, the House of Representatives, they also held a valedictory session for late former President Muhammadu Buhari, and it's all captured in this report by our National Assembly correspondent, Terry Kumi.
What would turn out to be a long day for members of the House of Representatives begins with yet another round of defections.
I have the honor to respectfully convey for
Representatives Taufik Ajilesoro and Emmanuel Olusanya, both from Osun State, defect from the People's Democratic Party to the All Progressives Congress. And Representative Marcos Onobun, the only PDP lawmaker from Edo State, joins the APC as well.
Can you please appreciate our new members?
The House then goes into a closed-door session for about an hour and resumes with an unplanned valedictory session for late former President Muhammadu Buhari, with the Deputy Speaker presiding.
Was one man who was not compromised by the trappings of power, who lived within his modest means whenever he found himself or wherever he found himself. We remember him because growing up in primary school, when he was the military head of state, I was one of the young chaps he picked from the primary school, and we were trained to form the Y Brigade, the war against indiscipline.
Both myself and Shagaya, and maybe Honorable Sesi, I'm not sure, will not be here if he didn't assent to the Not Too Young to Run bill.
Let the legacy of President Buhari and whatever disagreements we may hold about his tenure unite us now. In this chamber, where he labored alongside us to build a stronger Nigeria, let us resolve to carry forward his commitment to integrity, his commitment to accountability, his commitment to service. His life reminds us that leadership is not about perfection, but about steadfast dedication to the public good.
The brief valedictory session ends, and the House considers the report of its Committee on Aids, Loans and Debt Management for the approval of President Tinubu's request for an amended borrowing plan for the 2025-2026 fiscal year. The new borrowing plan seeks to accommodate the Lagos-Calabar Coastal Highway project as well as the Nigeria Universal Communications Access project.
The committee, in the course of the assignment, observed that the borrowing plan does not equate the actual new borrowing for the 2025 fiscal year, as it has already been captured by the Midterm Expenditure Framework, MTEF, covering both the federal and state governments. In the second report, Mr. Chairman, it was noted that the federal government has been complying with the implementation of the provisions of the Pension Refund Act 2014.
The committee also highlights that part of the loans will be used to fund priority projects such as railways, security, agriculture, power plants, housing, and digital connectivity. Terry Ikumi, Channels Television News.
All right, so now let's talk about that borrowing plan. Emphasis on the fact that most of it is not new borrowing, according to the lawmakers. Right there, it was passed by the Senate the day before, and then yesterday the House of Reps also did that. So let's have this conversation now with the Chief Executive Officer of Big Consultancy Services, Dr. Boniface Chizia. Dr. Chizia, good morning and welcome to the program.
Thank you for having me. Thank you.
Great. So some days ago, I had Mr. Tao Oyedele on the program, and we talked about, what the rebased GDP has done and the fact that, of course, more revenue is expected with the new tax law, which begins January, and how this may have given more ceiling for borrowing, although he said he hopes that the government would not like to use that, because now with the rebased GDP, we have a total debt burden of 39.4% of the GDP. That's below 40% ceiling, as said by the federal government. So we're still in good stead. And also, it's below the 55% threshold recommended by the World Bank and the International Monetary Fund. So I guess even with this amount of borrowing, we're still in a good place. But should we continue in this path? What are some of the possible consequences of it?
Well, you know that, as we said before, going and borrowing is not the point. The concern is that what degree of due process has been done before this borrowing has been done. You see, not much of it is out in the public space. So it's just between the presidency and the National Assembly. And of course, the degree of trust which the population now have on the National Assembly. So there's a trust deficit. So, so there are issues with that. So they said these things, and they were concerned. If you look at the quantum of money, the request in dollars and in naira, so on, even there's some borrowing also to be done domestically in stock exchange, also in dollars, is humongous, and where there's some concern that very soon, repayment will become an issue. The thing about debts is that those who get the debt, sometimes before it's due for payment, they are not there to pay. And so that's why we must be concerned about intergenerational equity. So they incur the debts, and we know, for instance, also that these debts are being incurred, to make the government look good for the elections that's coming, 2 years down the line, 3 years down the line, 2027. And so they will do all this, and some concern also about, the quality of our expenditure. So we spend this money, it's on record. I don't know if you saw the video that is making the rounds, where we spent 39 billion naira, to do the National Conference Center. And somebody has it as a video that says, in fact, he thinks it's not more than 5 billion. So that's concern, that our leaders are, to a large extent, that transactional in everything they do. So they do that, and then most of these monies that we're going to get is going to be diverted. And some of them are going to be sequestered, ready for the elections that is going to come a few years down the line. We're not getting value, essentially, if we must speak the truth, from the borrowings we are undertaking. So that's the concern. You borrow, and then nobody, like somebody did say in that presentation you showed us, that they're not so much concerned about how this is going to be paid. It's like, budget support. Right? If the fiscal responsibility says we should borrow for capital expenditure. If you borrow for capital and human development, then we can begin to monitor and see how this is going to happen. There's a video.
Dr. Chizia, can we do without borrowing? So we know that even the targets in our 2025 budget has not been reached or cannot be reached For instance, the price of oil there is supposed to be $75, and we know what's happening now. As of this morning, is less than 70, about $68. And we've seen what has been happening, with the price of oil and all of that. Our oil production was targets 2 million barrels. We're celebrating 1.5 now. At least coming from the NMDPRA. So, I mean, this obviously leaves gap, deficit, even more than what was expected in the budget, and the country must run. So, what are the alternatives that we have to borrowing?
Well, the alternatives you have to borrowing is that it should be productive. But of course, in the interim, we are challenged. So you have just one source of revenue, which is oil. And as you just said in the presentation, this oil is being impacted by international developments. So you have the tariff war, you have geopolitical problems all over. You have Iran and Israel. So the Strait of Hormuz and so on. There are challenges. So there are problems. But like I did say earlier on, it's not just the fact of borrowing. It's really what you do with the borrowing. There's no country in the world that's not indebted, one form or another. So and that. As a nation, the consequences where nobody will come and take you to court. It's just that you would lose attraction. So that if you want to borrow, so very few people, you won't have too many people rushing to lend you money, and then of course the coupon rate will be elevated, to reflect, the risk which you represent. So I think those are the challenges. So it's difficult to find any country in the world that doesn't have to borrow. You borrow, and sometimes the fact that you're able to borrow. It's kudos, so you should be able to leapfrog and have development. Plus, the most important is, to what extent is the money borrowed being utilized? That's the challenge. That's what is very important.
They tried to tell us that, at least from the report that my colleague filed in, about what they want to use this for, to channel towards infrastructure, which is supposed to drive the production that you're talking about, Dr. Chizia. But I guess we have heard this before. That's what Nigerians will say. We have heard how monies are being borrowed for some purposes, infrastructural development, and of course the Lagos-Calabar Coastal Road is part of it, as promised in this new borrowing or this, approved borrowings. But the question of following it through is also another one, so that by 2026-2027 borrowing plan, we would not still have the same promise with those infrastructure at the same state that they are now.
Well, the concern is that even when you cited the Lagos-Calabar Coastal Highway, there are challenges there. So they started, and then the route itself that we're going to take has not been adjusted. And this is after they've inflicted punishment on people. They've destroyed properties and so on and so forth. And then, in fact, if you test some of the things we are doing, the expenditures we are undertaking, we're not subjected to due process. So Lagos-Calabar Coastal Highway, was it subjected to any bidding process? Is the son of Sheraton not on the board of, this is what we're told, he's not on the board of the company that is undertaking this project? So I think that, so challenges, we need to begin to find how we can remove corruption from our life. Like the former president Buhari would say if you don't kill corruption, corruption is going to kill Nigeria. And that's where we are. So we need to fight corruption. And that's why we need to focus our minds when it comes to election 2027 in terms of the person we are going to hire to lead this country.
Well, when we talk about corruption and leakages, they say it is the citizens' responsibility to hold the government accountable. Are the citizens doing enough?
Well, the citizens don't have the cloud, they don't have the power, they don't have the access to information to do that. This has happened, and like I said, there's lots of opacity. Like I said, the relationship between the president and the National Assembly is not arm's length. We know what it is. Very soon you start singing on your mandate to stand. So it's a terrible situation to be in. And now we're gradually becoming a one-party state, which is terrible for us, terrible for our democracy. Because you have this situation, you have state hijack and so on, and then you also need to become almost more or less. I just think in the news that the APC needs about 3 more members, and they can take any decision they want in the National Assembly. And so what about the checks and balances? What about alternative viewpoints? And so, and then things will be done. And you have also operating an environment where there's so much impunity, so there are no consequences. The bridge just collapsed at Nasara, Lafia. 3 weeks bridge, 10 billion naira spent, and it collapsed. What happened there? Who chopped the money? So I think that's it. It's a terrible thing. We must sort out corruption in this environment. If we don't do that, we're not going anywhere.
The issue of corruption, Dr. Chizia, is that it even flows down even to the private sector. It's not just in the public sector. So I guess it's now difficult, where should the fight start from? Even though we have EFCC, ICPC, and all of that. Where should the fight of this corruption, blocking these leakages, where should it start from?
Well, I spent quite a lot on social media. I just watched a video. Some people were caught, policemen caught somewhere in Abuja. A friend of mine sent that to me. And they were behind the armed robbery. So I think that's the problem. When those are supposed to be gatekeepers and not those who are involved. So who's going to bear the cart? So it's a big challenge. We have to reset this country. And we're not too serious about it. And I don't think most people appreciate the dilemma we're in. We're caught in a terrible dilemma, and something has to shift. And we don't know how it's going to happen, but we hope that elections in 2027 will commence the process.
All right, Dr. Chizia, we certainly hope that, but I guess everyone will say it begins with you and I in a little corner, But I mean, we also saw as part of the approved package, the approval of euros, 2.19 billion euro. There's a 15 billion Japanese yen. And that takes me back to, when we had that arrangement with China, that's supposed to cut out the third party, the dollar component in Nigeria trading with China. And I wonder if this is the reason for this Japanese yen and euro grant.
Well, I think we're just going to them and trying to get a loan. Maybe we have some relationship, we have some things we're doing with them, we're getting this money. But the currency swap was a different thing. The Chinese were supposed to come to Nigeria and then accept Naira. And then we are supposed to accept their currency. And if we succeeded in doing that, and we did it, the way it was supposed to have been done, then we'll remove the issue of having to go via dollar, and then remove, the stranglehold which dollar squeeze, has on this economy, and that's exactly what it was supposed to be. But that matter was again advertised and was celebrated because that's the way to go. If you take the South, the ratio that's coming now, that they're trying to, I think they're trying to do is to see if they can have their own currency. So I think that's the way to go. But we followed it, and we, like most other things, we were not kept in the picture of what happened. And that's, suddenly down the road, I think that the whole thing just was swept under the carpet. Nobody has heard about it anymore, and that shouldn't be the case. Now, whether those in authority are, have moved on, it shouldn't be so. The governance continues. The institutions, they should have memory. So we don't have institutional memory. So other people will come into governance, and then they would forget everything we've done before. And that doesn't make us a serious country, I'm afraid to say.
I guess that's where the citizens also should be asking questions. I mean, this package was supposed to be made available for some businesses. How many businesses benefited from it? And then where's the continuity or sustainability of it? I guess that's another area for the citizens to ask questions and to speak up.
Yes, but citizens are poverty has been weaponized. So people are not educated. Go to the north and see what is happening there. So poverty capital of Nigeria. So there are issues. So the people in authority, they weaponize these things, and use it, make sure that they stay there and nobody's going to ask any questions. So it's okay to say, the citizens also should have a role to play, but they have to be empowered. So if somebody has not eaten food, somebody is hungry, and then you comes accused, to vote, and then he votes, and then you show him money for a loaf of bread. He's going to take it because he's hungry, and then he will sell his conscience, for a mess of purchase. So I think that's the issue. We need overall development, and then people need to be conscious, aware of what it means. That what you do somebody into power, You put somebody who is incompetent, to be there for the next so many years. And I know, of course, you've taken the fish it's given you, and then you just go and you swallow it, you eat it, and then the whole country is held to ransom. So I think that's a challenge. It's something that will take some time for us to do, but it's something that you can't take out of context. The fact that that the level of development within the system, the extent of poverty, it's 46% we are now, multi-dimensionally poor in Nigeria. So I think that's a big challenge. But take your point. I think that the citizens also should begin to. I think I'm beginning to see it. With the elections that are coming. I think there's a candidate that has popular followership all over the place, and we'll see how all that would pan out in 2027. But I think that something needs to give.
Yeah, but the thing, Dr. Chizia, is we want to fight corruption, and the same poverty is also fighting the political, in this political scene, because the talk of selling of votes, I think that's also another one, that kind of blocks the eyes of the people to being objective in choosing the leaders. It's the same poverty, so I mean, people sell their votes for paltry sum, and then eventually they choose someone who entrenches even the poverty that they are fighting. So it looks like the question of the chicken and the egg, which one comes in first?
Well, the politicians are not poor. In fact, the most lucrative business in Nigeria, over the years, is known everywhere, is to get into a political office. Because your hands will really detail. Take what's happening. What salary here is about 30 million a month or somewhere in the Senate. And what are we talking of the minimum wage? How much is it? And it's the same market. So the politicians are not, and then they also the looting, the stealing is incredible. I wonder if you saw the video of the lady that was a clerk in the National Assembly, and the sort of things that go on. Of course, she didn't say anything that we did not know. She told us what we know. So the whole place is putrefied. The whole place is stinks. There's poverty in the land. Corruption in the land. I keep on saying it's unbelievable. And then I'm not seeing that light at the end of the tunnel as far as this is concerned. So I'm not seeing it because I don't know how it's going to happen. But we hope that it will happen. So you put the distance should be out there. And as they're saying it, they are telling us that it's the MTF and so on and so forth. But when they are presenting it, if it is there, they should say it consistently. But they tell us they kept to this kind of responsibility, they kept to it and so on. It's all in the budget and so it sounds good. But if we have the MTF and we're operating it, then why are we having all this supplementary ascending capital expenditure? And so we have capital expenditure 2024 capital expenditure being extended to end of this year. Yeah, I've said it before. It's like if you have medium-term expenditure program, it's a 3-year. It's like a rolling plan. So you don't come again and you rush under the place and say we've extended it to. What are you extending? So a lot of inconsistencies that if you have half knowledge of what goes on, you just feel that these people are confused.
All right, Dr. Chizia, thank you so much for sharing your thoughts with us this morning on the borrowing plan and some of those details. Dr. Boniface Chizia is Chief Executive Officer of BIC Consultancy Services. Thank you for your time.
Thank you, Ine, for having me. Thank you. God bless you.
Bless you too. Let's take a break now. When we come back, we'll head to the global space with Will Ibon. Please stay with us. You're welcome back. It's still Business Morning on Channels Television. We do global news now with Will Ibon. Will?
Good morning, Ini.
Good morning, Will.
Yesterday we heard about that Japan-US trade deal. I think it's still, spilling over in terms of hopes for other regions, especially the bloc, the EU
yeah,
bloc.
I hear there's something coming up with US and EU.
EU, yes, is near.
That'll be a major one.
That'll be a major one for that bloc because, They need this. Policy decisions need to be made, especially with the economy. It's quite fragile. And, right now they need that stability and not uncertainty in terms of what they need to do. So let's just jump right in and see. The EU and US are close to a deal imposing 15% tariffs on most European imports, with some exemptions like aircraft and medical services or devices. Now, the EU has offered tariff cuts in return, but President Trump must approve. Now, Germany's car industry would be hit hard, and spirits like whiskey and cognac may see reduced tariffs. The UK previously agreed to a lower 10% deal. Now, the EU is bracing for rejection, threatening 93 billion euros in retaliatory tariffs. Now, a vote is expected soon, with measures possibly starting August the 7th. Talks continue, but the EU is preparing for all outcomes, not leaving any stone behind right now. But just talking about the US and Japan trade deal, yesterday involving their auto, which they cut a 15% tariffs. British car, we're seeing right now, and van manufacturing slumped in the first half of the year to its lowest since 1953. And that's outside COVID pandemic. And this comes as Donald Trump's US tariffs caused global industry chaos. And we're being joined by our London correspondent now, Juliana Layinka, to brief us on what's happening there. Juliana, good morning.
Good morning, Will.
Juliana, UK car output has hit its lowest non-COVID level since 1953, with a 12% drop in the first half of the year. Is this, or are we seeing deeper issues like electronic vehicle transition and global demand shifts here?
Well, I think it's a combination of all those factors, Will. We had data this morning from the Society of Motor Manufacturers and Traders, and yet again, car output has fallen dramatically, as you said, 12% in the first half of this year already, and this is the lowest output figure since 1953, bar those pretty brutal COVID years. I think that the main picture is that, yes, Trump's initial 25% auto tariffs completely shook the market, shook the industry and consumers too. But this isn't just geopolitics. I think here in the UK, because of the cost of living crisis, people are not purchasing as many cars. Also, as well, the job market isn't as tight as it used to be. And there is a transition to electric vehicles. So yes, I think this data just spells a challenging period for the UK manufacturing sector.
We did see that new UK-US deal, which allowed about 100,000 UK-built cars into America at that 10% lower tariff, and that started late June. Will this quota be enough to steady the ship, or is the UK looking to broker a new deal? Yeah.
I'm not certain if a new deal is on the cards. I think there is always a discussion about a bigger special relationship trade deal. But the 100,000 unit quota is a lifeline, but it's not a solution. I think it helps mostly luxury brands like Jaguar Land Rover and Bentley maintain their presence in the US market, but it doesn't leave enough room for growth, which we know is essential for Rachel Reeves and Keir Starmer's government. And so without a broader trade deal, there are concerns, but cautious optimism, because at least there are discussions on the cards with America.
Okay, so we're looking at electric vehicles looking like the savior right now. Output hit a record for the first half of 2025, that's this year. Now, is this a glimmer of hope that the shift to EV could offset the broader auto pain that we're seeing now, those that are, still using fossil fuels?
Perhaps. I think, there are those who are using electrified vehicles, as we've seen that the data shows it hit a record high in the first half of this year. But then if you look more broadly across Europe, electric vehicle car production and manufacturing is falling, and there isn't much optimism in the UK. Lots of car makers in the UK have also reversed targets for EV adoption. But again, yes, perhaps this could be considered a silver lining.
But how worried should consumers and investors be about the jobs, right now, the supply chain in the car industry? This disruption is going to bring to the auto sector. What should investors or job seekers be worried right now, or those who have jobs already in that sector?
Well, lower production means potential pressures on jobs, especially in supply chain dependent regions. As you said, we've seen factory closures or threats of factory closures around pretty, I wouldn't say impoverished, but struggling towns just outside the capital. Some manufacturers like Nissan are ramping up UK-based EV operations, as we've seen with the EV data. But generally, I think with automation and just with the changing nature of the industry and higher output costs, perhaps, yes, there could be concerns in the long run about maintaining and retaining jobs.
Are we seeing anything about the markets? I know that we're not delving into it, but is there any market reaction to all of this right now? Because we did see yesterday, after the Japan-US deal on autos, we see autos in EU jumped over 4%. Do we see anything from the UK auto sector in the markets?
Well, yes, we have seen that stocks that are automotive facing are down today. I think there is general concern across the board, Will.
Okay, thank you so much, Juliana Olainka, always giving us details live from London.
Thank you.
Now let's move over to other markets now. Other regions, see Australia will lift its long-standing ban on U.S. beef imports, easing a trade barrier that has drawn criticism from Trump administration. The ban in place since 2003 after a mad cow disease outbreak was cited by the White House when imposing tariffs on Australia in April. We see U.S. officials hailed the move as a major trade breakthrough. Australia denies the decision was linked to the dispute, saying it was followed a decade-long review confirming improved U.S. beef safety standards. Still staying in Asia-Pacific, South Korea has avoided a technical recession as the economy grew 0.6% in the second quarter, rebounding from a 0.2% contraction in the first quarter and beating expectations. Year-on-year, GDP rose 0.5%, boosted by strong exports of semiconductors and chemicals. Net exports were the key growth driver, with export volumes rising at their fastest pace since 2020. But analysts warn growth may slow as global trade weakens under new U.S. tariffs. Now, talks on a U.S. trade deal remain stalled, with 25% tariffs looming from August. Now, Seoul has ruled out using beef and rice imports as a bargaining chip. Now let's look at India's PMI. The flash PMI came out. We were expecting that this week. Manufacturing sector hit a 17.5-year high in July, with a PMI rising to 59.2, up from 58.4 in June. HSBC's flash survey showed that report today. However, services activity slowed slightly, with the PMI dipping to 59.8 from 60.4. This caused the composite index to ease to 60.7 from 61, signaling still strong but mixed momentum across sectors. Now, stay in Japan. In India, with Japan, we see Japan's Topics Index closed at a new record, surpassing last summer's high, as hopes for more U.S. tariff deals lifted market sentiment. Investors were encouraged by President Trump's softer than expected 15% levy on Japanese exports, boosting optimism about global trade. And the rally mirrors global market gains as traders bet that Trump's tariffs may have less impact on businesses than initially feared. Now, President Trump will visit the Federal Reserve on Thursday. That's today, the first such move by a U.S. president in nearly 20 years, escalating his pressure on Chair Jerome Powell over interest rates. Trump has repeatedly criticized Powell for not cutting rates and has floated firing him a legal move that experts say isn't allowed. Is going to be out pretty soon anyway. That's what Trump said this week. Now, the visit is seen as a symbolic challenge to the first independence, with Trump bringing his criticism directly to Powell's doorstep. And finally, Tesla says it has begun building a cheaper model and aims to get approval for its self-driving software in Europe this year after reporting its steepest sales drop in a decade. Sales fell 12% to $22.4 billion, and profits dropped 16% as U.S. tariff costs Fading tax credits and rising Chinese competition took a toll. Tesla lost $300 million from tariffs last quarter and warned of more pressure ahead. CEO Elon Musk blamed bureaucracy for delays in Europe and said autonomy would drive future value. Tesla's profits have fallen in 5 of the last 6 quarters, and its stock is down 30% from last year. We hope to bring you more tomorrow, but right now, Ini, so much excitement coming in from Asia, and especially with the fact that Japan has gotten a very sweet deal here. Everyone is hoping for a sweet. It's not going below 15%. The countries may get between 15 to 50%, but it's not going below 15%. So let's just say maybe that's the new baseline right now.
Well, for now, I mean, before now it wasn't. We didn't have a 15%, so anything can happen. And talking about President Trump, I think the cameras and the journalists in the U.S. will be very excited today. His visit to the Federal
I wish we could
Reserve.
get live.
Exactly, and I'm sure that we'll have a lot of interesting sound bites coming from there. But at least we know that the last time he talked about Jerome Powell, he had given him a little bit of ease, seeing that inflation did not, was hotter than expected, giving him a bit of ease about the issue of cutting interest rates. So we'll see what the atmosphere will be like, but I'm almost sure we're going to have some interesting sound bites by this time tomorrow.
It's going to be a showdown, Ini.
All right, Will, thank you. All right, and so before we go, let's tell you what happened in the market yesterday. It was still a positive. It has been, but that's expected. I mean, even profit taking is expected. It's a normal cycle in the market. So if the market has been surging, Mr. Iwani called it a bubble, so it doesn't bust on us. Let's just try to ease the pressure a bit. So there was a bit of profit taking in the market yesterday, but it still closed in the red, sustaining the 132,000 level and gaining 66.87 billion naira on the market cap. And the market cap closed at 83.856 trillion naira. Activity was mostly in the red yesterday, just to show you that there's a lot of profit taking took place there. Top gainers: Academy, TIP, Ikeja Hotel. Top losers: Austin Laz, Triple L, Triple G, and Omatech. Those were the top losers. Top trades, however, seem to be the usual suspect. Access Core was a top trade yesterday. LLX also sustaining the new trend of staying at the top. That also came up as a top trade. Japan Gold also was a part of the top trades yesterday. So it ended up positive, but we've gotten really greedy these days. But it might just be an opportunity for another investor to get on board the market and wait for the next boost that we would have. Who knows what will happen today? It might be a red today, saying that profit taking seems to be the theme of the day. I know some individuals who are already taking profit, but it's only to create opportunity for new investors to come in the market. The market is looking good, dominated by domestic investors. That's an interesting one that also gives hope that there won't be a sudden bubble burst. That's the fear of a lot of individuals. But we'll give you intraday numbers at 1 p.m. That will be Ladi Williams and Will Ibong. They'll take you around the world of business during Business Incorporated. I'm Ini John Mekwa. Thank you so much for being a part of the program. Enjoy the rest of your day.